All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. Gonna talk about what we saw this morning inside the live trade room. So I'm just gonna kind of go one market at a time, no very specific order. We look at crude oil, NASDAQ, S&P, and gold, all futures. I like the futures market for a lot of reasons. I've posted that in the other videos and stuff like that. I'm not going to dive deep into it. So these are the markets that we focus on. Why? Because they're very liquid. I'm very familiar with all four of them. I've traded all four of them. And, I feel like we get a good read on them. And when we get a good read on them and we take a look at the order flow and things of that nature, we're able to kind of put things in perspective of where opportunities could potentially lie. So we get together every morning at 8 a.m. I'm at the desk normally about an hour earlier so that I have a feel for what's happening, when it's happening, and why. I was very closely watching crude oil. You could see we were in an obvious downtrend, right? You can see we're trending lower here. But we had a hard time going lower. We started actually drifting sideways and even making slightly higher lows along the way. Now, this is a 3-minute chart. I don't lean too much significance on this. I call this more consolidation than a correction. And that's pretty much what it was. So I just channeled it because I wanted to see, do we break out of it to the upside, test the VWAP? Do we fall to the downside? And sure enough, we talked about this as we got together. We broke to the downside, created a resistance line. Those of you who have watched my videos know that when I'm looking to trade short, the first thing I'm looking for is resistance. When I'm looking to trade long, the first thing I'm looking for is support. I want an area where buyers and sellers have agreed to halt price from going beyond, okay? So we broke the channel, the short-term channel, what was previously marked off as support by 1, 2, 3, 4 touches has now been marked off as resistance 1, 2, 3, 4 times. Now, we were talking about this in real time. I said, guys, listen, if we hold this little channel as resistance, there's a pretty good chance that we take another dip lower. We saw some liquidity sitting down here in this area, and the market seeks liquidity like a fire seeks oxygen. So that's exactly what happened. Could have very easily just shorted the resistance. Okay, that's feasible if you're comfortable shorting at the resistance, or if you want to short at the breakout, right, or breakdown, I should say. So here's our little correction. Here's our resistance line, and you can see the market takes a very fast, very aggressive dip lower. My comments following that were, we've probably set at least a short-term low, potentially the low for the day. So we saw this happen. I put this resistance line in place. I put this correction line in place. Beautiful setup if we broke to the downside, but we did not. We aggressively reversed off of it. And I said, guys, there's a fairly good chance that we're going to probably ascend higher from here, at least for a period of time. And that's exactly what we did. In fact, this prior resistance line, once broken, turned into support. 1, 2, 3 touches, proved what was previously resistance to now be support. 9 o'clock open for the crude market. See high buying volume here. And, we just kind of kept grinding higher. Notice when we retraced right into the wick of that 9 a.m. open. So we placed essentially a higher low based off of the open, that high buying volatility, until we took this really aggressive rally and ultimately ran out of steam. And then the market started selling off from there. And now it's just kind of drifting sideways. We're almost running into 2 p.m. Eastern time. So, this was calculated to the downside and then calculated here as a reversal. Now, to the downside, it was trend favoring. To the reversal, it was obviously counter trend because it was a bigger picture reversal. And I'm going to shoot another video about this here because I caught this on a 4-hour chart and actually took a really great short into the afternoon. And I'll talk about that in another video. But this is how we played it out this morning. Calculated short to the downside, identified what was a high probability reversal, and that's ultimately what we got. calculate, took this and discussed how we fell right into the wick of the opening at 9 a.m. And then the market ran higher as we concluded our 11 a.m. session. And I said to my traders, I'm like, listen, the market's pushing higher, until proven otherwise. Okay, right? This is where we were proven otherwise. Ultimately, really, we were proven otherwise right here. We set a lower high. Okay? So that tells us, hey, Mr. and Mrs. Trader, we've set a lower high. There's a chance that we actually go lower from here, right? So you got to look at it as higher low, lower high, right? What's the bigger picture doing on crude? Selling off, right? Always zoom the chart out. If price is going from the top left to the bottom right, we're in a downtrend. If it's going from the bottom left to the top right, we're going in an uptrend. So pretty simple. Looking for that bias to the short side. And again, I'll show you in another video how I really identified this very clearly on a 4-hour chart. So that's what we found this morning, the dip to the downside and the reversal here on crude. Onto the NASDAQ. Let's take a look at the NASDAQ here. Really only found one spot that I genuinely liked, and it was the breakdown of the retest of the opening range. The problem with this is we got economic data at 10 a.m., gave an aggressive push up, found resistance, gave an aggressive push down, and then we closed all the way down here. This is a massive risk. Okay, yeah, did it work out? It did. Okay, nobody's discounting that. I mean, if you take a 2-candle stop here, you are risking 280 ticks on the NASDAQ. No, thank you. Okay, no, thank you. I am very calculated about my risk because I know as a trader that being risk adverse is the first job that I must focus on, right? Is managing my risk. This is not gambling. This is not like cowboying. This is like trading with great discipline. Yes, did the market sell off? It did. Okay. Could you have maybe found a tighter spot down here? Maybe risk one candle? Yes. This was the pullback. Right here, checked all the boxes. It did go lower. But for my entry style, this is way too risky. Now, had you just tried to kind of short this area based on the news, as the news release kind of concluded, okay, maybe. But also I'd like to let news kind of settle down. That's just me. Again, I'm a very conservative trader. So that's what we saw in the NASDAQ. Again, I wasn't quite in love with it. The S&P, we did find a nice little spot here before the opening bell. And you could see we were kind of really super tight here. I'm trying to get it to maximize there. So we identified this area here as resistance, right? Market did push down, did pull back. You could have traded the breakdown if you wanted to. But I said to him, I'm like, listen, there's a very small resistance zone up here. Entering at resistance, creates less risk if the trade goes in our favor. Well, 6 ticks is not a huge risk, right? A lot better than 280 on the NASDAQ. And we had a very calculated target based off of the prior day's analysis. Now, when we get these big gaps like this, I love them because they present big opportunity without running into any technical risk. However, I do like to pay and protect myself as soon as possible. Right? So I went back to yesterday's pivot and I said to my traders, I'm like, hey, at 5107 and change, 5107-ish, 5107 quarter to be perfectly exact, not a bad idea to pay and protect yourself as we get to that area. The low of this candle is 5107 quarter, right? Before we took this aggressive reversal on that 10 a.m. news, and then ultimately we did sell off. But looking left will provide you with the opportunity of saying, hey, my trade's gone a good distance. I'm in the profit. I need to pay myself at some point, and I need to also, more importantly, protect myself. So that was the play there. The prior day's pivot, I said to them, I'm like, listen, if you're short the S&P, grab some profits here, move your stop to break even. You definitely want to be at break even before the news, and you can see why it would have, wicked you out. But either way, it was a nice little 6.33 to 1 risk reward. So 38 ticks on the S&P. Not a bad setup. All right. We did push lower like the NASDAQ did. We did take this little pullback to the pivot here. It did take a little drop down. It got messy. And I said that to him. I'm like, listen, yes, we pulled back here, but this looks exhausted, right? Like we've been kind of selling off since 7:30 this morning. It looks like we're reaching some form of kind of selling exhaustion. And we did. We kind of went sideways for a little while. And we're still going sideways, right? We did pull back to the pivot. We did dance around the pivot. We did dip. We did pull. This is not very clean price action, right? We want to find a spot, and then we want to respect the spot, and then we want to look for a conservative target. Okay, this trade took a total of what? Tell me how many bars it was. I don't think it does. Let's see. I can measure it off. So this took a total of an hour. Okay, 1 hour to capture 38 ticks on the S&P 500. Not terrible. Okay. Remember, just because you're a day trader doesn't mean you're in and out of the trade in seconds. It means that you're identifying a trade that you're going to capitalize and enter and exit in the same day, right? Like sometimes it takes a couple hours. Sometimes it takes a couple minutes, right? Every trade's different. Now, gold here this morning absolutely ripped off of this support area we identified. So we see that price here is tight as usual, right? Gold pretty tight, but gold's been in this awesome run to the upside. So I was looking for a snap higher. So as we were analyzing the market, we talked about this, just right after 8 o'clock. I said we got two very slightly lower highs. I drew this orange line, just very slightly descending, saying, hey, this line could or should act as support. I also drew a little box here, just measuring out the two prior highs, saying, hey, if this breaks, it should be considered support. So I was looking for support at this little green box, and also, more importantly, looking at support at this very slightly descending trend line. And I got it, right? I said, guys, if we break here, we could come back and retest this and then push off of it. And this could be the base that the rally needs to support the push higher. So as usual, first order of business for me is to look for some form of support, which is, if I zoom in and maybe it'll let me see a little better, this horizontal black line right here. That is my support line. This is my trend line off the two prior highs. This is my little box that I'm looking to find support in this area, right? So we put in the support line, we put in the pullback, we hold the support line beautifully, we rip out, and then, guys, we absolutely explode higher. So if you bought at the support line, at the trend line, which is what we were looking for the support, okay, not really a great confirmation, but definitely the lower risk, 158 ticks, okay? And this all happened inside of less than 20 minutes. Now, if you bought here at the breakout, which the trade never went against you, got 137 ticks in less than 20 minutes. Had you bought here, you still got to give it some room to breathe. It did pull back about 6 ticks. And had you bought it here, you would have been probably risking this candle 30 ticks. But again, quickly take profits in between these pivots here, move your stop to break even, and just let it go. So again, the lower risk was to buy at support, which was these descending highs, this little box here. I put the support line in. Guys, I do all this in real time as price is actually happening, right? Like all this was done live. This was not like after the fact, like, oh, guys, this was a great opportunity. You should look for it next time. No. We identify it as it's happening, right? And this thing just absolutely, totally ripped higher, following the overall trend of gold. Again, zoom the chart out. What direction is gold going? Bottom left, top right. It's in an uptrend. What am I looking to do? I'm looking to buy it. And this was the spot to buy it this morning. and in under 20 minutes, you had over 130 ticks. So that's the recap, guys, on how this morning all played out. Calculated crude to the downside for a very quick, aggressive move, and then basically called the bottom, at least for the near term. Talked about the S&P here, that set up as it retested resistance and the support that we identified off the prior day. Identified the NASDAQ as a very high-risk setup, not one that I would consider. And then, of course, identified gold as it took an absolute explosion higher, 130 ticks in less than 20 minutes. So that's the long and short of our 3-hour session from this morning. If you guys find this information, if you find this content informational, if you're enjoying it, if you like it, if you could like the video, it helps more folks see it. If you haven't subscribed to the channel and you want to see more of my analysis approach to the market, I encourage you to subscribe. I appreciate each and every one of you viewing this content. If I can help you in any way, feel free to reach out. There's tons of links and content below. Feel free to click on it, consume it, send me any questions you have. I'm here to help you, but I shoot these videos really to try to help retail traders overcome the hurdles that I personally endured throughout my trading career and still personally endure, right? Like, I'm a human. I make mistakes. I am what I am. You know what I mean? Like, it's sometimes my emotions take over, but I've learned to control those things. I've learned to analyze the market in a very consistent, disciplined way. And my goal, for what I do for my traders, whether they're working with me swing trading or they're trading with me live every morning or whatever it is that I'm able to help them with, is to help them see the market from 13 years of experience. Now, that doesn't mean I'm perfect. It doesn't mean I don't take losses. It doesn't mean that, I'm the world's greatest trader. I'm certainly not going to claim that by any means, okay? I am a human, and I learn something new every single day, and my goal is to share those learnings with you, share my mistakes I've made over the years with you, so that you can hopefully overcome your hurdles and battles and become a profitable trader. There's a statistic out there that 90% of traders fail. And if I can help anybody overcome the smallest hurdle that's holding them back, to me, the time and effort to put these videos together is well worth it. So God bless you guys. I appreciate each and every one of you. Again, like the video if you found it informational. Subscribe to the channel if you'd like to see more, and I hope to see you guys in the next one. God bless, and I'll see you soon.